Hey guys. Alrighty, so we finally got the BOJ meeting. We finally got the rate hike they started talking about almost 9 months ago now. As you can see, looking at this big old green candle sitting here on SPY, we didn't quite get the market reaction we were expecting. So we got the reaction at 11 p.m. last night. Markets kind of didn't really do a whole lot. We just kind of stayed flat. Early this morning, though, we found a lot of weakness. We had a pretty sizable sell-off. But then from there, it was, a pretty interesting morning. I felt like opening hour, we were very bearish. But despite that, it seemed like we were just more or less consolidating, kind of back testing resistance for the next leg down. But we got this weird reversal at 11 a.m. that took us higher. It seemed like definitely some sort of options like squeeze today. There's really no other justification that I have for this type of movement that we had today. This is just one of those days where it seems like either everybody that was piled into puts for the BOJ closed them, or this was a short covering rally. So, it's just kind of interesting to see the way this market is so resilient. Now, again, in general, I've been saying for months now that this is a bull market, until we close under daily 20 EMA support and hold, that's this level right here. We were looking right at it again, and on Friday we were on it. Until we close over that level or under that level rather and hold, generally speaking, we are bullish. Now, again, people like to say I'm a perma bear because I like to point out when there's a high potential for a play to the downside. This was a very big bearish catalyst, and I'm still not convinced that we're completely out of the woods from this BOJ announcement. This might be a long-term impact that we see play out later into the end of the year. But anyways, that brings us to FOMC tomorrow. Right now, markets are expecting 3 rate cuts by end of year. Now, if you remember back in December 2023, when we got our dot plot, our December FOMC meeting, Jay Powell basically came to the market. So they went from basically expecting no rate cuts to saying, yeah, we're going to cut rates in 2024. That was a massively bullishly received move by the markets. Now, the one thing about that is the markets took the 3 rate cuts the Fed said and said, okay, well, we're going to price in 7. So for quite a while early year, we had 7 rate cuts priced in. Markets have got humbled over the last 3 months now. We are officially on par with the Fed. So right now, markets are pricing in 3 rate cuts, with the highest odds that our first cut comes in June. Essentially, what the market is doing is expecting every other meeting, so June, October, and then December, for there to be a rate cut. So rate cut, pause, rate cut, pause, rate cut, end of year sort of thing. So the question is going to be, are we actually going to see the Fed's dot plot hold on to the expectation? For me here personally, I don't think we are. And the reason being is that we have had now back-to-back months of inflation pushing back up. Yes, the general trajectory macro has been to the downside, but we have basically since October established a really solid range of this 3 to 3.5% area of CPI. We cannot seem to break below that. Now, going into December, we had our small little pop, and then it looked like we were trailing down, and we're going to continue to see inflation fall into the twos. However, of course, that did not happen. So now the Fed has to reevaluate, honestly, and I will be surprised to see the Fed continue on this path expecting 3 rate cuts in 2024. Now, my expectations are if the Fed pulls back, and they really should, they should probably cut down to 1 rate cut is my guess, then we're probably going to see a pretty bearish reaction. However, if the Fed holds steady, I think we get a massive pump tomorrow. But looking at the TA real quick, so on SPY here, so we got 512.85, our demand that was put in today. We had the really nice abandoned baby candle, and with that gap down, we did play it out for a while there, but then we ended up with this, impressive bullish engulfing candle. We got back over 8 EMA resistance. So right now, it looks like we broke our downtrend here. So we're pretty much just in an upward channel right now, and realistically, our resistance is 517.16. So until we close over that level and push up, likely this is still a range. I mean, if you go back to really right here on February 29th, so almost a full month now, our range has pretty much been 507.96 to 517.16. It is just very, very choppy. And something else to really look at during this rally here, especially if you go back to probably like end of February or middle of February to right now, it's 2 days of bearish price action, then two big green days. Two bearish, two green, four bearish right here, two or three green. You got two red days here. You got a couple days up, 2 days down. This is a very, very choppy trend. This is not that easy, clean price action that we saw all the way back here where it was just smooth to the upside. We have not seen anything like this in a very long time. So going over to ES here, now remember contract did roll, so we got a little bit of a different presentation here on ES. But as of right now, we had a triple top right here at 52.39, and we are going to close over that level. That effectively puts us breaking out of the resistance of this range here, and now we have a new demand at 51.85. So upside target here, we got 52.75 to really 5300 as our upside target now. The bears are really going to need to be back under 51.85. Now going to the Qs here, we still have our breakout triangle that's in play here. And realistically, if, we didn't quite close over previous candle highs. So, we would like to see a close over 438.84 area. But we did take back the 20 and the 8 EMA. So yesterday on the Qs, it was the only one to put in a new demand. So we already have 433.85 demand here. Now, same thing, if we go back to February 22nd here, we realistically just have a range from 443.75 to 433.85. So, it's really interesting to watch the way this range is playing out here. And you know what? I should have there should be a supply. There's a double supply rate. I don't know why TOS doesn't have it on there. Anyways, so right now, the way I'm looking at this is, yes, we are not selling off, but at the same time, we are not breaking out either. Realistically, the bulls need to take 443.75 and 445.79. We need to close over that to then really see the next leg up. Right now, I mean, this is realistically just a big range. I mean, really, if you go all the way back, I mean, you could go all the way back to February 2nd, and we got, a $20 range. You go back to here all the way back to January 19th, and you got an even bigger range. It's just pretty much ranging. So now going over to NQ, same thing here. We got a new demand at 18.068. So the interesting thing here is this is not really what I would call a bullish continuation candle. This should actually potentially provide a little bit of a downside move. Now, the one thing I find interesting is same thing here on NQ, we have a massive range. So we basically got this triple demand from 17,980 to 18,0668. So that's our triple demand support area here. Really, you could even do a quad demand if you go all the way down to 17,858. And then we just have our resistance up here at 18,473. So realistically, again, the bulls need to close over 18,473 and hold to see the next major leg up. Otherwise, we are just sitting in this consolidation range. And if you look at the last 2 to 3 weeks of trading now, NQ has continued to be the laggard. ES and really I would say the market rotation is what is providing all of the upside lift. Many times when we're trading intraday, we're seeing ES be the strength, ES be the one that is holding us up. Now looking at the VIX here, we did get a new supply today, which, I'm a little underwhelmed by the VIX today. Same thing yesterday. I expected more of a move. I expected there to be a bigger reaction to this BOJ news. Now, again, long-term implications, this is a really big deal, but markets are kind of just shrugging it off. right now we are sitting at 13.72. So, if we close under this tomorrow, which, a lot of times after FOMC, we do get a pretty big VIX crush, then that's going to be the first time since December that we have made a lower low. Now, I do think there's a possibility we could come down and maybe still hold our trend line here before we go back up. But for the most part here, this is a pretty big deal to watch the VIX start to unwind like that. So, depending on what the Fed says tomorrow, we could really see a pretty large move either to the upside or to the downside on the VIX tomorrow. Now, looking at the dollar here, we officially broke out of our trend. So we are in that upside move that I was talking about. So there's kind of our new upside channel that we're in. We took out 103.77, but we did not quite get to 104.144. So now we're still in the uptrend here. If we get a big rejection down in the dollar, that's going to be bullish for markets though. Now the 10-year, interestingly enough, put a new supply in at 4.324. So now we got a really, really tight double supply at 4.324 to 4.33%. And it looks like with the bearish engulfing that we're going to reject and actually sell off on the 10-year. Now again, with FOMC tomorrow, if we get the dot plot that comes in higher, if we get the dot plot that says we're not going to cut rates, we're going to stay higher for longer, we should probably see a pretty large move up on the 10-year. But again, the dollar and the 10-year aren't even really moving with markets that much correlation wise. So I wouldn't put a ton of weight in that right now. I do expect a pretty volatile day tomorrow with FOMC. A lot of times the morning of FOMC can be very boring and a very tight range. So just be careful trading into FOMC tomorrow. But I hope you guys had a good day trading today, and I will see you guys tomorrow.